Willkommen zum aktuellen Gold-Invest-Interview. Auf unserer fortlaufenden Suche nach vielversprechenden Rohstoffunternehmen sind wir auf eine australische Goldgesellschaft gestoßen, die über großes Potenzial zur Verfügung scheint. Wir sprechen heute mit Executive Chairman Simon Lill von Grey Mining, um uns von ihm erklären zu lassen, warum sein Unternehmen für uns interessant sein könnte. Simon, welcome. As this is our first introduction of De Grey to our audience, please tell us a bit about the team behind De Grey.
Thanks, Bjorn. Look, De Grey, I've been involved with the company since late 2013 when I think it's fair to say the market in Australia for junior explorers was difficult and the company at the time was struggling. So myself and a couple of colleagues have kept it alive through some difficult times since then. We, in February of 2016, had just completed a small capital raising through a rights issue, and that resulted in we have a series of tenements that had previously been joint ventured out where the companies had not earned their interest. And in February of 2016, the tenements were effectively handed back to De Grey. We had some capital in the bank, and we were able to access a gentleman by the name of Mr. Andy Beckwith, who is a geologist. Andy had a good look at the project and at our request, and advised the board at the time that he felt that there was some substance in this project and that it had probably been forgotten in many ways in the marketplace, whereby the initial discovery was made in 2003. There was a lot of drilling in 2004, and really there had not been a lot of information about the project from the gold perspective since 2004. It was joint ventured out in 2007, 2008, and had not been seen properly by De Grey until Andy had a look at it. Andy has a history, he's a gold geologist. He worked for many years as the CEO of West Gold, where he was responsible for significant gold discoveries. I don't know the exact figure, but I believe it's in the millions of ounces. He's also brought on board a gentleman by the name of Philip Tornatora. Phil has been involved with Galaxy, which is a lithium project, and also Northern Star, where he was also responsible for the discovery of millions of ounces. So both of those companies, as I understand it, owe a debt of gratitude to both Phil and Andy, and we're very lucky to have two senior geologists on board. We have been able to handle the project to date with senior geologists, whereby most of the work to date has been geological, but we are in a transition stage as well as we move into more project studies, and we're looking at the team around us and how best to beef up both the board and the team in terms of resources and bringing some of the different disciplines onto the table, such as obviously metallurgy. We have a consultant metallurgist working with us at the moment, and probably more importantly, maybe as importantly, you don't want to upset the different disciplines, but as importantly, a mining engineer as well, in that the project will be a multiple pit project. We have a range of strip ratios, and mining engineering will start to become more important as we move forward project studies.
So let's get to the project then. Tell us a bit, what is the project? Give us a short summary.
Okay, we are calling the project the Pilbara Gold Project. It is the amalgamation of the Turner River project, which De Grey Mining has had since 2003, and the Indy project, which is contiguous with our tenements and to moving towards the west of our tenements, the southwest of our tenements. The two projects combined, we think 1 + 1 = 3 in this situation. Both projects need each other. At the moment, the project is just over 1 million ounces. The grades of the project, the 1 million ounces, it's 18.5 million tonnes at 1.9 grams per tonne overall. So it's a relatively, well, it's a lower grade open pit scenario, whereby the mineralisation across all pits commences at surface, and all pits are open at depth. So we can't say that we will be able to go underground, but certainly on 3 of the 4 pits we also believe there is underground potential as well. So the project is basically, it's a 1 million ounce project. We're looking at an open pit scenario to start the project off. We have just completed a scoping study on the project, which has shown positive economics. The scoping study at the stage of sign-off was showing a 5-year mine life at 1 million tonnes per annum. That, in the first instance, was possibly a bit disappointing given the size of the resource. The 18.5 million tonnes is only coming to 5 million tonnes recoverable. But there were some reasons for that. The main one being that there's been quite a bit of deep drilling which shows up as inferred resources that, again, we just haven't done enough work on it to show the underground potential of it. So that's one reason why the conversion of resources to recoverable resources is a bit lower than we would like. Equally, it indicates that we needed to find more resources, and we have got that well underway. We've just completed what we would call a successful drilling program at what was previously an exploration target, the Molina resource target. We've announced those results last week, and we're showing very, very good widths of intersections. It depends what you're after. If you want grade, if you want width, the best intersections probably 37 metres at 1.7 grams per tonne, but there are also very good intersections such as 10 metres at 6 grams per tonne. So we're showing good mineralisation throughout Molina. That should come forward in the next few weeks as a resource in certainly in the inferred category, possibly in the indicated and inferred category. We also have another resource on the Indy project that had previously been reported as a JORC 2004 resource. We haven't reported it as a JORC 2012 resource, but at JORC 2004 it was somewhere between 30 to 40,000 ounces at 2.7 grams per tonne. So we're just having to pull apart some of the additional information that we have there, and have our resource geologists sign off on that. So we believe the combination of Molina and also Taurana was that additional resource will get us very close, if not to 2 years additional mine life. In addition, there is Range River, or the Indy project, was previously operated as a heap leach project back in 2007, 2008, and there is the remnants of, well, it's not the remnants, but there's a remaining ore body that is the heap leach pad that has circa 850,000 tonnes of ore on it, that we've recently released drill hole results on it to try and check what sort of grade is there. It will be a low grade resource. We haven't yet announced it, but look, it'll be somewhere probably just underneath 1 gram per tonne. So there'll be another 20 to 25,000 ounces on that heap leach pad. The beauty of it is that it's been mined, milled, crushed. It's really ready to go straight into a leach processing, and should leach very, very well. So how we use that in a process plant planning into the future, I guess our thought process is it will be used as commissioning ore, but also probably as rainy day ore. We do have singular rain events in the region. We have rivers that for the most of the year are very dry, and for some part of the year they have trickles going through them, and once every 2, 3, 4 years they might become a torrent. So there are times when there might be pits that are cut off in which case we have a spare set of ore there that can be easily fed into the mill as well.
So, if I understand it correctly, it sounds very interesting. You have that million ounce resource, you have possible additional resources that you already know about but haven't announced yet, but
I'm prepared to say probable additional resources, but I do need to be careful of what the standards over here allow us to say. But we have a high level of confidence they are going to convert to resources, yes.
Okay, very interesting. And that means with a bit or with a lot of more work, there's a lot of potential to beef up your numbers, get the mine life up to 7 years or more. So what, after we heard of all that, what you've already done or what you already know about the project, what are the next steps then? Well, what kind of news flow can we expect in the future?
The short-term future, we obviously have, we are assessing the additional resources as we've just discussed. Those, assuming they do convert to resources, those announcements should be through in the next 2 to 3 weeks, and I think we've indicated that to the market at the moment. There are outstanding drill results still to come. The main drilling that we've just completed was on the Molina project, which we referred, but there was also some drilling that was looking on extensions of existing pits and resources. That will be coming through in the next 2 to 3 weeks as well. We've had some diamond drilling across all of the pits to get some fresh core for metallurgical work. The metallurgical work is important, but the scoping study that we have just concluded, the major pit, which is our Wingina pit, shows that it leaches very quickly. It's an oxide resource and will shows recoveries of 95%. So we're very comfortable the oxides across the project will recover to 90 to 95%. We have some fresh rock at one of our major pits, particularly the Withnell resource. We used a recovery of 80% for that, and previous metallurgical work that was done back in 2006 would seem to give us a high level of confidence that 80% was very, very achievable. We, of course, would like to improve that, and we believe we will get that somewhere above 85% with metallurgical work. And that's significant from our pit optimisation work, our mine planning work, our scheduling work, but also as to whether that pit in particular, it will improve its the chances of going underground as well. So there'll be some metallurgical results coming through. We will move into pre-feasibility study work that will include those additional resources, pardon me, and it will also include the updated metallurgical work, and certainly the confirmed metallurgical work, but hopefully the improved metallurgical work, but also the optimised metallurgical work, because there are in some areas reagent consumption is probably a bit higher than maybe it needs to be. Power and ultrafine grinding is a significant trade-off as well. So that will feed into a pre-feasibility study work that will hopefully be released, those results sometime before the end of the calendar year.
So it sounds like a lot of work going on over the remainder of the year. So can you sum up for our audience why, in your personal opinion, now might be a good time to have a closer look at an investment into Grey Mining?
Yes, and again, one needs to be careful about how one says this. But look, we have a market capitalisation of about $8 million, and we've got over 1 million ounces in the ground. So certainly we believe we are very undervalued, highly undervalued. The market, the team that we have has achieved an enormous amount since February of 2016, and I think we deserve some credit for that maybe the market isn't giving us. You won't find many other 1 million ounce gold development stories at that sort of valuation, and let's just recognise it's 1 million ounces and growing. We are very comfortable that that resource will be growing. And I think something that perhaps we've missed out actually, Bjorn, before the summary is that we have an enormous amount of exploration potential across that tenement. We have two major shear zones that have shown that they are mineralised. We've basically got 160 kilometres of shear zone, which, if you want to come up with a concept, it's basically between Kalgoorlie and Laverton, in one of the most gold-endowed regions in the world, Kalgoorlie to Laverton, and they work on shear zones very often in that region. Ours, we've virtually barely scratched the surface across that shear zone area. The shear zones where it's been drilled has tended to be where it has outcropped. It's a little bit like the Loch Ness Monster, or it's up and down. So in areas where it's not outcropping, it's been under-drilled, and yet there are tantalising drill results in some of those areas that have not really been followed up. So we're very, very confident of further discoveries in that region. I should just quickly add that we have other opportunities, and whilst we're focusing on gold, the market is not giving us value. We have a zinc resource that the last time we referred to it in an ASX announcement, we had 3.5 million tonnes of zinc equivalent, which is one way of measuring these things. 3.5 million tonnes of it was 8.9% zinc equivalent inferred resource on our tenement package. The zinc price has changed since then, so that zinc equivalent does move up and down depending on the range of different commodity values. That's basically a zinc, silver, lead resource with some gold in it. We have also announced we've got a 7-kilometre pegmatite trend on greenstone belt in our tenement package, and the interesting thing there is that pegmatite trend, we've shown that we have lithium soil samples across that trend, and we're 30 kilometres from the Pilgangoora projects, which are the two major projects in the Pilbara that are under development. So again, the market's not giving us any credit for that, and the lithium story obviously remains strong in the Australian market and in the global market as well. So given our proximity to Pilgangoora, in a way, you'd be surprised if there wasn't spodumene in there. So that is untested at this stage. So there is hidden value across within our tenement package as well that, again, we don't think the market is giving us value for. I suppose the final thing, we've just recently been at Diggers and Dealers in Kalgoorlie, the annual mining conference in Western Australia, and Kin Mining won the award for the best development story. We don't think the market is particularly aware of us at the moment, and we don't think we're far behind Kin Mining. We did have a very good reception from the people that we spoke to about our development story. So I think that's probably it in a nutshell. There's lots of hidden value with what we have, but we're a very cheap million-ounce resource. Let me say that amongst that million-ounce of resource, it is mainly in measured and indicated. So a lot of it has been drilled out. The resource that is presenting to the mill under our scoping study is almost predominantly in measured and indicated, and it presents at 2.1 grams per tonne. So it's a reasonable grade going to the mill at that level. I guess, and to be honest, to be open and honest to your viewers, that the negatives that probably hang over us is that we have two halves of a project, and we need to acquire one half of the project from some Chinese vendors. We have a good relationship with them. The acquisition price is reasonable given what we have acquired, but the market does see that as a negative and asks the question, well, how are you going to acquire that? We have to acquire it. It's a 15 million Australian dollar acquisition price. We have at the moment until July 24, 2018 to acquire that. we believe we will get some assistance from the Chinese moving forward, but we can't guarantee that, because that's if we had that confirmed, we would have announced it by now. But we believe that they will be of assistance, because they're proving to be good partners at the moment. They understand the magnitude of what we're trying to pull off. They seem to understand that the two projects need each other, and they seem very supportive of where we are trying to head. So it can be seen as a negative when you're looking at it from the outside in. Inside, we're quite comfortable that we will get perhaps the concessions that we might need moving forward there.
Okay, thank you. That certainly is a comprehensive overview of what you're trying to do and doing. We'll be sure to talk to you at a later point again. Thank you. Thank you, Simon.
Thank you, Bjorn. Thank you.